If you are a Canadian senior receiving GIS, OAS, or any government benefit right now, stop what you are doing and watch this entire video because something changed in 2024 and into 2025 that could quietly reduce your monthly payments or even cut off your benefits entirely. And most seniors have no idea it happened. We are not talking about a small adjustment. We are talking about income thresholds. The lines that determine whether you qualify for benefits and how much you receive being shifted in ways that directly affect your wallet every single month. So before you assume your benefits are safe, let me walk you through exactly what changed, who is affected, and most importantly, what you can do right now to protect your income. In Canada, many seniors receive government benefits. The most common ones are Old Age Security, which people call OAS, and the Guaranteed Income Supplement, which people call GIS. There are also provincial benefits, disability top-ups, and other support programs. These are programs designed to help seniors live with dignity, especially those who have limited income from other sources like pensions or savings. Now, here is the key thing you need to understand. These programs are not handed out equally to everyone. The government uses something called an income threshold or income limit to decide who gets what. Think of it like a line drawn on the ground. If your yearly income is below that line, you get full benefits. If your income creeps above that line, your benefits start to shrink. And if your income goes far enough above that line, you may stop receiving certain benefits altogether. This system is called income testing or income clawback. It sounds technical, but what it really means is simple. The more money the government thinks you have coming in, the less they give you. Now, here is where it gets important. Those lines, those thresholds are not permanent. They change. The government adjusts them based on inflation, cost of living updates, policy decisions, and budget priorities. And when they change, seniors across the country can either gain a little more money or quietly lose some of what they were already counting on. That is exactly what is happening right now, and that is why this video matters so much. OAS is a monthly payment that you receive once you turn 65. As of recent adjustments, the maximum monthly OAS payment for seniors aged 65 to 74 sits at approximately $713 per month. And for seniors who are 75 and older, the amount is slightly higher, around $784 per month. Because of the 10% increase that was put in place for that age group. These amounts are indexed to inflation, which means they are supposed to go up when the cost of living goes up, and they have been rising. OAS increased in January 2025 and again in April 2025 based on the Consumer Price Index. That sounds like good news, and in some ways it is. But here's the part that many people miss entirely. OAS comes with a clawback rule. It is officially called the OAS recovery tax. If your net income from all sources crosses a certain threshold, the government starts taking back a portion of your OAS. For the 2024 tax year, which you reported on your 2024 income tax return, the clawback threshold was set at $997 in net income. For every dollar you earned above that amount, 15 cents of your OAS was clawed back. Now, $9,997 might sound like a lot of money, and for many seniors, it is. If your income is below that, you are in the clear when it comes to the OAS clawback. But here is why this matters for you. Even if you are not close to that number, seniors who have investment income, rental income, RRSP withdrawals, or RRIF withdrawals need to be very careful. RRIF withdrawals, the mandatory withdrawals from your registered retirement income fund, count as taxable income. If your RRIF minimum withdrawal plus your pension plus your CPP plus any other income pushes you close to or over that threshold, you could find yourself losing OAS dollars that you were counting on. And something else changed for 2025. The clawback threshold was adjusted upward to approximately $93.54 for the 2025 income year. That is good news because it gives seniors a slightly higher ceiling before the clawback kicks in. But here is the critical thing. And if you had income that pushed you into the clawback zone in 2024, Service Canada will reduce your OAS payments automatically starting in July 2025 based on your 2024 tax return. The reduction runs from July 2025 through June 2026. This is not something they call you about. It is not something they send a big warning letter about. It just happens. Your monthly deposit gets smaller, and if you are not watching closely, you might not even notice right away. So, please look at your recent OAS statements. If your net income was above $9,990 in 2024, you will see a reduction starting this July. And if you are unsure, call Service Canada or speak with a tax professional who understands senior benefits. Now let us talk about GIS, the Guaranteed Income Supplement, because this one hits the hardest for seniors who are living on the lowest incomes. And the changes here are significant. GIS is designed for seniors who have little to no income beyond OAS. It is a non-taxable monthly supplement added on top of OAS to ensure that the lowest income seniors in Canada have at least some floor of financial support. To receive GIS, your income must fall below a certain threshold. That threshold depends on your marital status, whether you are single, married, or in a common law relationship. For a single senior, the maximum GIS payment as of early 2025 is approximately $165 per month. That means a single senior with no other income could receive up to $713 from OAS and up to $1,065 from GIS. A combined monthly income of roughly $1,778. That is not a lot of money to live on, but for many seniors, it is their lifeline. Now, here is how the income thresholds work for GIS. And here is where the recent changes matter enormously. For a single senior to receive any GIS at all, your annual income, not counting OAS itself, must be below approximately $22.56 for 2025. That is the cutoff. If your income from other sources, CPP, work pension, part-time job, RRSP withdrawals, rental income, investment income exceeds that amount, you get no GIS. For married or common law couples, the thresholds are different because they look at combined household income. If your spouse also receives OAS, the combined income limit is around $29,136 to receive any GIS at all. If your spouse does not receive OAS, the combined income limit is approximately $52,848. These thresholds are adjusted quarterly. That means they shift in January, April, July, and October of each year. This is based on inflation and consumer price index calculations. This quarterly adjustment was introduced to keep up with rising prices, and it has been helping seniors keep up slightly better than in previous years, but it also means that the numbers you heard last year might not be accurate today. Here is what changed recently and why seniors are being caught off guard. In previous years, GIS thresholds moved slowly. They were adjusted annually and the changes were modest. But with inflation running higher over the past 2 years, both the GIS payment amounts and the income thresholds have been shifting more noticeably. Here is the problem. When threshold amounts go up, that sounds like good news, and it can be. But many seniors also saw their own income go up. CPP payments increase significantly. Some pensions have cost of living adjustments. Even a small amount of investment income from a GIC or savings account can push a senior's total income higher than it has ever been before. And that extra income can reduce your GIS dollar for dollar. Here is how the GIS reduction works. For every dollar of other income you receive, your GIS is reduced by 50. Be proactive, stay informed, and don't forget to subscribe and click the bell icon for weekly updates on your Canadian senior benefits. That is a 50% reduction rate. So, if you earned an extra $1,000 in interest from a GIC, your GIS could drop by $500 for the year. That is real money being taken from seniors who earned it by saving. And it can feel deeply unfair. I understand that. But knowing the rules means you can plan around them, and that is what we are going to talk about. The Canada Pension Plan CPP has been going through significant changes, and those changes are affecting GIS eligibility for seniors in ways that were not fully anticipated. Starting in 2019, the federal government began a multi-year enhancement to CPP. This meant that working Canadians were contributing more to CPP, and in return they would eventually receive higher CPP retirement payments. The enhanced CPP payments have been rolling in for seniors who retired more recently or who deferred their CPP to a later age. In 2024 and 2025, the maximum CPP retirement benefit for someone who took it at age 65 is over $1,300 per month. Now CPP counts as income. It counts toward your GIS income calculation. And as CPP amounts have grown both because of the enhancement and because of the annual indexing, some seniors who previously qualified for partial GIS are now finding themselves just slightly over the threshold. Imagine this scenario. A senior who has been receiving GIS for 5 years. Her CPP was $800 per month. She had no other income. She received partial GIS because her $9,600 annual CPP was well under the $22,000 threshold. Now imagine her CPP goes up due to indexing to $900 per month. That is $10,800 annually. Still under the threshold. So GIS continues fine so far. But then she puts $20,000 into a GIC because a financial advisor told her to protect her savings at 5% interest. That GIC earns her $1,000 in interest income. Now, her total income is $1,800. Then, the federal government raises her CPP slightly again through indexing. She earns a small amount from helping a neighbor, which she declares on her taxes. Be proactive with your benefits. Call Service Canada at 1-800-277-9914 for personalized help and subscribe for weekly updates. Her total income creeps up to $14,000. Her GIS is reduced dollar for dollar, 50 cents for every dollar of non-OAS income above zero. She loses $7,000 of her potential GIS because her income is $14,000. None of this was malicious. None of it was unexpected by the government. But from the senior's perspective, it can feel like a trap. You save money, you earn interest, your CPP goes up a little, and then your GIS goes down. This is the real-world impact of income thresholds, and it is why understanding them is so important. The federal government is not the only one setting income thresholds for senior benefits. Every province in Canada has its own set of programs for seniors, and each of those programs has its own rules. Let us look at a few examples. In Ontario, the Ontario Guaranteed Annual Income System Gains provides a top-up to low-income seniors on top of federal OAS and GIS. To qualify, you must be receiving at least some GIS already. The maximum benefit under Gains is about $83 per month for a single senior. The income threshold is set such that only seniors with very low incomes qualify. As of recent updates, the province has made adjustments to try to include slightly more seniors. In British Columbia, the Senior Supplement is a provincial program that provides additional income to GIS recipients. Changes to the federal GIS thresholds directly affect who qualifies for this supplement because it is linked to GIS eligibility. In Alberta, there is the Alberta Seniors Benefit. The income thresholds for this program are set provincially and were updated in 2024. Single seniors with an annual income under approximately $29,630 may qualify, and couples with combined income under about $48,000 may also qualify. These thresholds were increased from prior years, which is good news. But seniors who were previously just over the old threshold should check again because they might now qualify. In Saskatchewan, the Seniors Income Plan has its own income thresholds. Remember, stay proactive. You can reach Service Canada at 1-800-279-9914 for more details. Call mid-morning midweek for shorter wait times. Subscribe and click the bell for weekly updates on the benefits you've earned. See you next time. In Manitoba, the 55 Plus program has different rules. In Nova Scotia, seniors can access the Affordable Living Tax Credit and other supports, each with their own income limits. The important message here is this. When federal thresholds change, it can have a ripple effect on provincial programs. And many seniors qualify for provincial benefits they have never applied for simply because they did not know those programs existed or because they were told years ago that they did not qualify, but the thresholds have since changed. If you are not already receiving a provincial senior benefit, please look into what your province offers. The money is there. You just have to claim it. If you are still working part-time and receiving GS, the government has an earned income exemption built in. The first $5,000 of employment income, money you earn from working, is completely exempt from the GIS income calculation. Beyond that, 50% of employment income between $5,000 and $15,000 is also excluded. This means you can earn up to $5,000 from working without losing a single dollar of GIS. And between $5,000 and $15,000 in employment income, only half of it counts against your GIS. However, and this is critically important, this exemption applies specifically to employment income and self-employment income. It does not apply to CPP, pension payments, investment income, rental income, or RIF withdrawals. So, if you are a senior who does occasional work, whether it is babysitting grandchildren for pay, doing some consulting, working part-time at a store, that income gets treated more favorably than investment income or pension income when GIS is being calculated. This is something that many seniors, income advisors, and tax professionals do not even mention, but it is worth knowing. If you have a choice about where your income comes from, understanding how each type of income is treated can make a meaningful difference. Service Canada determines your GIS and OAS clawback amounts based on your most recently filed income tax return. This is very important to understand. If your income was high in 2024, maybe you sold a property, received a large RRSP withdrawal, or received a lump sum from a pension, that one-time spike in income could affect your benefits for the entire period from July 2025 to June 2026. But here is something many seniors do not know. If your income has dropped significantly in 2025 compared to 2024, for example, you retired or stopped receiving employment income or a one-time event won't repeat itself, you can apply to have your GIS or OAS clawback recalculated based on your estimated 2025 income rather than your 2024 actual income. This is done by filing what is called a Statement of Estimated Income form with Service Canada. The official form number is ISP 341. You fill it out and explain your current income situation. Service Canada then uses that estimate to adjust your payments sooner rather than waiting until July 2026. Rather than waiting until your 2025 tax return would normally be processed. This can make a significant difference to your monthly budget. If your 2024 income was high because of a one-time event, but your 2025 income is much lower, you could be losing benefits for a full year unnecessarily. Filing that estimated income form is how you fix it. Don't leave money on the table that you are entitled to. You can call Service Canada at 1-800-277-99914 to ask about this process or visit a Service Canada center in person. Bring documentation of your income change, a letter from your employer if you retired, or a statement showing you closed an RRSP. This is a question that comes up constantly when we talk about income thresholds. So, I want to address it directly. Delaying your benefits. Some seniors choose to delay taking CPP or OAS past age 65 because for every month you wait, your eventual payment goes up. You can delay OAS until age 70 and each month of delay increases your payment by 0.6%. That is 7.2% per year. Delay by 5 years and you receive 36% more OAS every single month for the rest of your life. It's a powerful way to boost your security. Subscribe and click the bell icon for weekly updates on your Canadian benefits. You've earned them, so be proactive and persistent. Similarly, you can delay CPP until age 70 and each month you wait past age 65 increases your payment by 0.7%. That is 8.4% per year. Wait 5 years and your CPP is 42% higher every month. But here is the income threshold side of this. If you are a lower-income senior who qualifies for GS, delaying CPP might not actually help you in the long run. Here is why. While you are delaying CPP and your income is low, you can receive more GIS. That is good for right now. But when you finally do start CPP at a higher amount, that higher CPP payment will push your income up, possibly reducing your GIS significantly. It is a trade-off that needs to be calculated carefully based on your specific situation. For higher-income seniors who do not receive GIS, delaying CPP almost always makes sense because you are simply getting more money per month with no clawback concerns. But for GIS recipients, the math is more complicated. This is not a decision to make based on a YouTube video alone. Please sit down with a financial advisor who understands Canadian senior benefits or call Service Canada before making a decision about when to start CPP or OAS. But knowing that this trade-off exists is the first step. All right, I know we have covered a lot of ground. Let me give you a clear, simple action plan. Step 1. Find out your current net income for 2024. Look at your Notice of Assessment from the Canada Revenue Agency. Your net income is listed on line 23,600 of your tax return. This is the number that Service Canada uses to calculate your OAS clawback and GIS eligibility. Step 2. Compare that number to the thresholds for OAS clawback. The 2024 threshold was 90,997 vent. If you were below that, no clawback. For GIS, the 2024 single senior income threshold was approximately 21,150 cigars in non-AS income. If you were above that, you received no GIS. Step 3. If your income in 2025 is different from 2024, particularly if it is lower, file the Statement of Estimated Income form with Service Canada so your benefits can be adjusted now, not in a year. Make sure to subscribe and click the bell icon for weekly updates on your Canadian senior benefits. See you next time. Step 4. Check whether you are receiving all the provincial benefits you are entitled to. Contact your provincial government's Senior Services Department or visit their website and look up what programs are available for seniors in your province. Many seniors are leaving money on the table. Step 5. If you are still working and receiving GIS, make sure you are getting credit for the $5,000 employment income exemption. This should happen automatically when you file your taxes, but it is worth confirming. Step 6. If you received a one-time bump in income in 2024, like a property sale, an inheritance, or a large RRIF withdrawal, you speak with a tax professional about how to manage this in future years. With proper planning, many of these income spikes can be smoothed out or timed to minimize the impact on your benefits. Step 7. Set a reminder every January to review your income for the prior year and compare it to the current year's thresholds. Staying informed is not just something you do once. It is something you do every year because the rules keep changing. And the seniors who are most financially secure in retirement are not always the ones who save the most money. They are the ones who know the rules and make sure they are getting everything they are entitled to. You paid into this system your entire working life. CPP deductions came off every paycheck. Income taxes funded OAS. You earned these benefits. Claiming them fully is not taking advantage of the system. It is using what you built. Service Canada is your first stop for questions about OAS and GIS. Their national number is 1-800-277-9914. Their website is canada.ca and you can search Old Age Security or GIS to find all the current threshold information, payment amounts, and forms. The Canada Revenue Agency handles your tax return, which is the foundation of all your benefit calculations. If you need help filing, look into the Community Volunteer Income Tax Program, CPP, which provides free tax preparation help to low and modest income Canadians, including seniors. You can search CPP on canada.ca to find a clinic near you. 2111 is a helpline that connects you with community services in your area, including seniors benefits navigators, legal clinics, and social workers who specialize in helping seniors understand their entitlements. You can call 211 or visit 2191. Your provincial government's senior services website is also worth bookmarking. Every province has a page dedicated to senior financial supports. Search your province name plus senior benefits and you will find it. If you have a local MP member of Parliament, their office can often help you navigate Service Canada issues or escalate a review of a benefit decision that you believe is wrong. MP constituency offices deal with Service Canada issues regularly and many have staff specifically trained to help. Remember, you've earned these benefits. Don't hesitate to reach out for the help you deserve. We'll see you in the next update.